What's going on, everybody? Welcome back to my channel. So for this video, I'm going to teach you 3 powerful signs that you can use in order to get into some really good trading opportunities. Now, I talk about support and resistance a lot, and I talk about trend lines, how I don't use them. But what I want to do today is show you the signs that I look for personally when getting into trades. Now, it's not just about waiting for price to come back to a key level in the market and then looking for a trading opportunity. You must identify what the behavior of the market is doing when it comes into these key levels. Even trend lines, I'm not against them, but just many don't know how to use them properly. So for this video, I'm going to show you 3 examples that's really going to exponentially change your trading around 1000%. So let's take a look at this. Most of the examples we're going to show you today are of reversals, and I believe we have one continuation. So let's take a look at this. First pair we're going to look at is New Zealand dollar USD. Now we're looking at the hourly time frames. So for this video example, we're going to use 2 time frames this time, so you know how to start looking for confluence and start to identify evidence in the market, confirmation in the market, and when the momentum shifts. So let's look at this market structure. We have a strong bullish structure to the upside. We're clearly making higher highs and higher lows. We may not be able to determine them on the hourly time frame, but if we go down to the 15-minute time frame, we'll start to see the price making those levels. Again, not so clear, but we have a push phase, higher low, push phase, higher low, push phase, higher low, etc., etc. Back to that hourly. Now, what we can see here is when the market made a new higher high, we had a breakout of this structure indicating bullish pressure. So we've made that higher high, but we've had that break back in. And with that break back in, we've had this break close below the previous higher low. So this is definitely indicating some sort of bearish pressure on this market structure. What we want to do is we want the market to come back to a key level. This is a sign where the sellers are sitting previously. So if the sellers are still there, this is going to give us our higher probable opportunities to take a trade because we can place our stop loss above structure. So that's what we're simply going to do. Now, most traders, and I will say this now, are not patient enough to allow for the market to come back to these key levels and end up taking sells or buys in the middle of nowhere and then end up getting stopped out. But what we're going to do is we're going to patiently wait. It doesn't matter if the market respects these key levels and goes down. We are patiently waiting. And this is a very good strategy that you can use if you're a full-time worker or if you haven't really got that much time to be spending on your charts, because what that will do for you is allow for you to just set your alerts on the market, wait for price to come back to these key levels. And when the market comes back to these key levels, then you know what? You know it's time to look at your charts. So the first example here is strong bullish pressure into this market structure. So let's analyze this from a behavioral perspective. If we have strong signs of bullish candles pushing into a key level, what are we expecting the market to do? Well, we're expecting the market to break this level. Now, if it's a very strong level, then what's going to happen? The market's not going to break it. And the sign that I want you to look for when looking at these examples on your own, when you're doing your back testing or your forward testing, is this right here. This is a very strong indication that the depletion of bullish pressure is very, very likely to happen in this key level or in and around this key level. Because if this is a strong bullish candle and I was to remove this candle here, we didn't look at anything else on the chart. What are we going to say the next candle is going to be? More often than not, we're going to look at this candle to be, or the next candle to be, a bullish candle. But when we see a depletion, that is a strong sign that this key level right here is more than likely holding sell orders. So what can we do? Well, now we can scale down. We go down to our lower time frame, which is our entry time frame, and we look to see what the market is doing. We can clearly see at the moment the pressure is to the upside. What we're trying to now identify is the depletion of this. This is the key level. This is where the market is holding. Now what are we going to do? We are simply going to wait for the market to give us a strong bearish indication to the downside that the bears are in control of this market. And now look, we had an area where price was failing to break below for a long period of time. And then look, we had this break close below structure. And this is what we're looking for. This was strong bullish pressure into this key level on the hourly time frame, a depletion, an immediate depletion. Then price was failing to break above and below this its own structure, and then immediately we've had this break below. Now, do we know if this trade is going to win if we take it? Absolutely not. But what we've now done is we've built confluence to identify that this level that we have here, this box, is a strong level in the market where price has reacted to in the past. We've seen price come back to this level with strong bullish pressure. We've seen a depletion of that bullish pressure, and now we are seeing the market showing signs of bearish momentum. And this is when you want to hit these trades up. And this is all about the numbers. So let me explain this very clearly. Even if this trade does not win, the more often that you take these trades in a very systematic way and patient enough to allow the market to come back to these levels and wait for this evidence and confirmation, the more likely the numbers are going to play out in your favor in the long run, and the likelihood of you becoming a profitable, consistent trader is extremely, extremely high. So let's take a look at the results of this. We'll just press these very quickly and see what happens. And there you go. 1 to 3 risk reward ratio. Where does our stop loss go? Above the key level. What's our target? 1 to 3. We're just trading systematically and playing the numbers over and over again, and look at the results. This has come off the back of a strong bullish candle to the upside or structure to the upside on an hourly time frame, as you can see here. Depletion of that into a key level where we can see the market has reacted in the past, and then now we have that bearish sentiment step in using the lower time frames on the 15-minute time frame or whatever time frame you want, where price started to shift in bearish momentum, and now you see the winning trade. So that is pattern number 1, and a very, very powerful pattern for those who are trading price action and technical analysis. Let's move on to example number 2. Example number 2 is pound New Zealand dollar. So for this, we're going to identify the structure of the market. We can clearly see it's to the downside. Previously, the market was sitting in a consolidation area where price was failing to break below for a very long period of time. We had this break of this structure, this retest of this consolidation, and a continuation to the downside. So what are we looking for? Well, we're looking for sells. Now, how do you identify a key level? Well, what you want to identify is how price is coming back into areas in the market where there's lots of wick rejections. So this will be the first area that we're going to look at for that depletion, or the pattern that we're now going to learn. The first pattern on New Zealand dollar USD was a depletion in either bullish or bearish pressure and an indication of continued momentum shift back to the downside or upside. So let's look what happens here. We have a depletion. Now what are we doing? We're going down to the 15-minute time frame and we're looking for that momentum shift. So we're looking for bearish pressure to step into the market and push to the downside. Now, as we can see here, this is not happening. The market is pushing to the upside. So now we avoid taking those sells because we do not have the evidence that we need to support that this key level is a strong level in the market. We are looking for the market to show strong signs of bearish pressure, which we never got. So let's head back to the hourly time frame and see what we can do. Now, even though this level is broken, this does not mean necessarily we're looking for buys. We can also look for key areas in the market where there are multiple wick rejections and identify what's happening there. Now notice we didn't take a sell here because we didn't get that bearish sentiment and the momentum shift we needed. So let's start again. The structure of the market is still to the downside. Nothing's really changed. Now we see price coming into this area in the market where there's multiple wick rejections, and look, we have a reaction. So now we're going to scale down to our 15-minute time frame and we're going to start to identify what's happening. Now understand that a key level in the market is not a single line, it's an area. So we're taking this area as a whole and now identifying what's happening. So let's see if we get that momentum shift. We don't get that momentum shift. We can see strong bullish pressure still and the momentum's to the upside, but we're getting wick rejections. We're continuing to get wick rejections, which is a very good sign, and this is what we're looking for, but not enough. We want to see the momentum shift. Now we don't see the momentum shift, we see an attempt. Let's see what happens on the next candle, and there you have it. The momentum shift has now kicked in at this key level in the market. So what are we going to do? We're going to take the trade. Entry as an instant or however you're going to take it, and stop loss above structure. And as always, we're going to be going for our 1 to 3 risk reward ratio. So let's take a look at this. 1 to 3. and let's see what happens. Now understand, obviously these are examples to help you moving forward to start back testing and forward testing these to see if they're going to work for you. Not every single trade you're going to take is going to go in your direction immediately, and of course not every trade you're going to take is going to win. But the reason why I'm doing this is because obviously it's an example for you to see how you can take these and back test these using your own initiative to see if it's something that's going to work for you. So here we have it. Take profit number 2. Now, how did we work this one out? Well, back to the hourly. What we saw is a key level in the market where we didn't get the momentum shift. We had that bullish pressure and the depletion, but not the shift. So we wait for the market to come back to another key level in a sell-buy structure, and then we're looking for that depletion. And look here, this is what you need to be looking for. Strong bullish or bearish candles pushing into a key level and then leaving these wick rejections behind. This is a strong sign of depletion. Remember example number 1, we looked at the depletion here and then the momentum shift. On pound New Zealand dollar, we see strong bullish pressure with a depletion with a wick rejection. And as you can see, we took this trade and we done pretty well with our take profit. So now let's move on to our final example. Our final example is going to be on Euro Aussie dollar. So with New Zealand dollar USD, we looked at a reversal. With pound New Zealand dollar, we looked at a continuation. And for our final example, we're going to look at a reversal. Now this one's slightly different, and many people ask me, well, how do you take these exhaustion trades? How do you know the earliest sign of a reversal? Well, I don't know every single time, that's the honest truth. But what I do know is if I take the trade systematically over and over again, eventually the numbers are going to play out in my favor, and more often than not, I'm going to have those winning trades as opposed to those guessing games of trying to take the reversal and losing. So being systematic is what's going to help you here. So let's look at this example. Structure the market to the downside. We can see very strong bearish pressure, a really nice bearish candle. Now we can see a depletion. Why all of a sudden do we have a depletion? Well, this is not enough to start to gather evidence, but it is a sign to start showing that the market may be going through its phases. In any downtrend, we have a push phase, exhaustion phase, push phase. A lower low, lower high, lower low. So if this is a push phase, then what we could suspect is the market may want to pull back to create some sort of lower high before a continuation. And off of the back of this bearish candle, we're expecting another bearish candle. If we have a strong depletion like this, then we can start to suspect something is happening. But is this enough? Absolutely not. What we want to see is at least 2 or 3 candles indicating a depletion. Now, why is this? Well, look at this example. If the market creates a lower high, does it leave that level immediately and go down? No. If the market's going to exhaust, does it immediately exhaust and go up? No. If the market makes a lower high, does it immediately make the lower high and continue? No. And it continues and continues. So don't try to be the first into the markets. Wait patiently for the market to build up enough concrete evidence and then start to scale down to look for those trades. Because if the market's not going to leave a key area straight away, then what's the rush? So we've gathered this evidence. Sell by structure, strong bearish pressure to the downside. Lower low has been formed, a depletion in that bearish pressure, and now we're starting to see a key level created. So what are we going to do? We're going to scale down to our 15-minute time frame and we're going to identify what's happening. Price is not able to make this lower low. We can see that the market structure at this moment in time is indicating to us that after this strong sell pressure and this lower low has been formed, it is failing to continue to go down. So what are we looking for? Absolutely right. We're looking for that bullish pressure to step into the market. Now we want, when the market's creating a consolidation, for the market to break above its own highs. This is now indicating that bullish pressure. But we don't buy in a push phase. We wait for the market to come back to our key level. Just like in all the other examples, we wait for it to come back. And you see, push phase, exhaustion phase, and now we can see the market is pushing to the upside, indicating this strong bullish pressure. And this is when you want to go in for the trade. Place your stop loss below the higher low or the structural low, and then go for your targets. Now notice with this example, this is more of a reversal / exhaustion trade, but identifying that the price is not making the lower low, identifying the bullish pressure break above structure and the retest of previous structure. And then this is our safest option to go in for this trade, and this is where the highest probable trading opportunities are going to come from. So the market is continuing to push up with that bullish pressure after the depletion of that strong bearish candle on the hourly time frame, and let's see if we hit those targets. And there you have it, targets hit. So 3 examples for you, and this one is not the easiest to take because sometimes you are going to get a lot of break-even trades, and at times you may take some losing trades. So make sure you're waiting for true evidence and confirmation of a depletion in either bearish or bullish pressure. Wait for that momentum shift, then look for that retest, and then that continuation. So I really hope you enjoy these 3 examples. I am very sure that these are really going to make a difference to your trading. And as I always say, if you've enjoyed this video, please smash that like button, subscribe if you haven't, and until next time, take care.